Okay, good morning, everybody. My name's Greg Taylor, Equity Director at Solder Brothers. I'm joined here by Emily Mohan, the Investment Director who's joined the team recently. Uh, we appreciate you taking the time. We'll make a start now. We've still got a couple of people we're waiting to join, but there will be a recording of this session which will circulate around to everybody. So we will make a start in respect of everyone's time. And what we also have is a message function here. So if there are any questions you have, please put those in the message section and we'll do our best to address them on the call. Otherwise, we will give you the ability to contact us directly and we can come back to you directly with any questions. But all right, again, we've got a mix today of existing fund investors, but also some new investors that are looking at the fund. So the intention today is to give a brief introduction, an overview of the fund, give a more detailed update on the current investments and how they're performing, and talk a little bit to the pipeline and number of co-investment opportunities that we have coming through the pipeline. So a little bit to cover. We should knock it all over within half an hour. And again, encourage any questions through the session, which we'll deal with at the end of the formal presentation. Look, for those that I haven't met, my name's Greg Taylor. I head up the equity business here at Solder Brothers. I've spent over 25 years working in investments. I started off my career in investment banking with Citigroup, then moved over to Schroders as an Australian equity listed fund manager, and spent the best part of the last 10 years focusing on unlisted or private equity investments as well. So pleasure to meet for those that I haven't, and but I'm really fortunate. I've got a great team here at Solder Brothers. I'll shortly introduce you to Emily, who's a key member of the team. But just stepping back and looking at Solder Brothers as an investment house, Solder Brothers has over $4 billion of assets under management, and they're spread across the three asset classes of property, credit, and equities. And the fund we're talking about today, the Solder Brothers Tech Fund, is very much is the latest of five equity products that we have in the market, and was launched last year and is available for applications through to the end of calendar year 2025. But Solder Brothers, a truly institutional fund manager, counts global institutional clients such as GIC and Partners Group. So we're very fortunate as an equity team to have a strong platform to work from, both from a sort of governance perspective, but also from an administration perspective, which enables Emily and myself and the broader team to spend a lot more time on the business of investments opposed to the business of administering the fund. So that's where we are. So let's talk a little bit about the tech fund. So the Solder Brothers Tech Fund, it's a wholesale fund that was launched 5 years with a 5-year investment horizon. So a little bit shorter than your typical period, but it is a 5-year wholesale lockup fund. What we invest in is emerging growth technology businesses. And these aren't startups, these are emerging growth companies which focus on key 5 sectors. The sectors we focus on are around property tech, fintech, telecommunications, health tech, and more broadly sort of B2B SaaS businesses. We'll go through a little bit about the profile of the investments we target, but we launched this fund last year and pleased to report we've successfully made 3 proprietary investments since launch, which is great. So we'll talk to those in detail. We've got the SkyMesh business, which is a telecommunications business, the property tech business, Market Boomer, and the fintech business, Prosper. And so at the moment, we've sort of deployed about $15 million worth of capital into the fund, but the fund remains open to applications with a target of $50 million, up to a hard cap of $100 million, which we've got the calendar year to close out. And what we talk about here is return target, well in excess of 15% IRR. What you'll see in the 3 investments that we've made to date, the target IRR for these that internal rate of return is 30-40% plus. So it's a concentrated but high returning fund. So if we jump over to the next page, what we'll see here is a little bit more about the team. So again, I've briefly introduced myself, and then we've also got Emily and myself are based up in Sydney, where we have Tanay, the other investment director, based in Melbourne, our Melbourne head office. He's coming on 20 years of experience in corporate advisory and investments as well, and has been with the Solder Brothers Group for coming on 8 years. So very experienced, and the ability to join Emily and myself. And on Emily, we had Emily joined the team in December of this year, or December of the year just gone. I've been fortunate enough to work with Emily. This is the 3rd iteration over our career that we've worked together. Very pleased to have Emily join the team. She's got some great experience and network, which is really helping us as we continue to expand and deploy funds into new investment opportunities. Emily, I might just pass on to yourself, just a quick background on yourself, and maybe talk about our 2 other analysts, and then we can jump into a bit more about the advisory team.
Yeah, of course. Thanks, Greg, and great to meet you all, and really excited to be part of the Solder Brothers Group, but then also with a core focus on the tech fund. So a bit about my background: I have about 12 years experience under my belt, both across listed equities and private investments. But I guess the last 5 or so years of my life I've mainly spent in private markets, and that's taking on quite an active role. So not only originating transactions, but the whole investment process from start to finish. So that includes things like jumping on the boards of businesses, driving a lot of the strategy and governance and financial profile of those businesses, and then looking at exits as well. So a bit of background there, but I will talk mainly about Frankie, Francis, and Dane, our 2 analysts that help support the team, and that's really quite a critical function for us. So we have a core stability there with our team, and both have experience again across listed and unlisted investments. So really helpful in supporting our businesses that we invest in.
Thanks, Emily. If we jump over the page, a real unique feature of the Solder Brothers Tech Fund is this investment and advisory committee that we've pulled together. So in addition, starting with the investment committee, myself and Rob Solder. So Rob's one of the Solder brothers, and has 20+ years experience in equity investments, and is a great resource to help source, diligence, and monitor the investments in which we make. Also, we've got a lady by the name of Hayley Evans on the investment committee, and who works actively with the team as well. So Hayley has great global experience, really brings that global lens and network to the team. Hayley spent the last 10 years as an investment director in one of the larger family offices in the world, which was Joe Lewis's Tavistock Group. So Hayley, invaluable in helping us, a lot of the great Australian-based tech, take them to the Northern Hemisphere, the US and Europe, and it's great experience and network there to help mentor the companies, but also make really valuable connections, to drive the operations. And then ultimately, more often than not, the exits of our companies are typically trade sales, and more often than not from global players. So having been tapped into that network is a great advantage of having Hayley on the team. In addition to that, we've got 3 other industry specialists, and the profile of these people are former C-suite executives that have worked in the verticals in which we invest, and they've got to the stage of their career where they've had their successful exit of business they were either the founder of or a CEO, managing director, and they now work with us to now look at investment opportunities, help us source deals, diligence, operate, and then ultimately exit the investment. So we've got Stephen Benton, who's a 30-year veteran in the financial services and fintech space. At the moment, Stephen's sitting on the Prosper board as our representative, and has some great experience and network there. Then we're very fortunate on the telco front. We've got Paul O'Neill, who's one of the founders of Boost Mobile, actually, who just recently exited to Telstra, and Paul currently sits on our SkyMesh investment board. And then in addition to that, we've got Jordan Grives, who is known to many of you, and has had 2 successful exits in the telco space over his career, and we've actually dusted Jordan off and put him back in as the managing director of our SkyMesh business. So having the ability to have that caliber of people within the team to bring into our portfolio companies to drive outcomes is a real superpower of the fund, and a key distinguishing feature. Well, I'll jump over the page here, and what we'll focus on is what we invest in. And today, the intention is not to give you a detail on why the technology sector, but I'm a very big believer the rate of technology disruptions is great and as rapid and as it has ever been. And you only need to see the recent sort of explosion of ChatGPT and AI, or artificial intelligence, and the rate of growth and disruption that we experienced in calendar year 24 was the greatest we've ever seen in the last 20 years. So it's still great opportunity for high quality technology businesses to really forge a strong position and disrupt their markets. And what's really exciting for us at the moment is where we are in the valuation cycle. So we're really at the bottom of the valuation cycle. We've seen over the last 3 years especially, valuations come off greater than 50%. And quite sincerely, there's not a lot of other funds deploying capital in the space in which we invest at the moment. And that gives us a real competitive advantage. The terms we've been able to negotiate on the investments we've made and the investments we have in our pipeline are as good as I've seen in the 20 years in the investment industry. So what you're seeing is technology still being a key driver of growth and disruption. You're seeing really good valuations, but probably most importantly is the quality of the pipeline of opportunities we're seeing. So if I step back and say the types of companies we invest in, we're looking for companies that have got through $5 million of technology revenues and approaching or have hit profitability. So that's that cuts out a lot of businesses that never get to that point. But the ones that have, and especially the ones that have over the last 3 years in an environment where there's been very little capital available, and you've seen quite difficult market conditions. The ones that have got through that and rose to the top, are really solid businesses that we think are sustainable and now have the opportunity to deploy some growth capital, and they're extremely well placed. So we're getting strong thematic, good valuations, and very good quality. And that, I can assure you, that doesn't happen very often. And I believe right now the risk versus reward in this unlisted growth equity space is as good as it's been in the 25 years I've been investing in the space. And I think we'll look back at this vintage, that funds that are deploying capital over the 2024-2025 period is one of the better vintages in the next 10-15 years and in the last 10 years. So really exciting time. And so if I jump over the slide, I'll just dig down a little bit deeper on what we invest in and what the fund looks like. So remember, think about it as a $50 million fund invested across those 5 sectors that I've touched on. So we'll look to make 2 investments in each of those sectors, and an average of about a $5 million investment per position. Again, what we're looking for is companies with deep intellectual property. They've got a strong moat. They've proven themselves. They're commercialized, and they need a growth partner to take them through to their ultimate exit. So that's really important. So again, we're a 5-year fund. Our investment horizon is 3 to 4 years for these investments. And so we're looking for an alignment between the founder group or management group and ourselves on what that pathway to exit looks like. And typically companies are coming to us because they're looking for an institutional investment partner who can help them with, yes, growth capital, but also some active management to accelerate the growth of their business, really reach that critical mass, that scale, and then to help them with the exit process. I've been fortunate to have over a dozen successful exits in the past, and that experience and process is really valuable to these founders of the businesses that we partner with. So enterprise value, we typically invest in companies valued between 20 million and 100 million. There are exceptions where it's a little bit higher, but rarely lower. And what our role is to really hyperscale these businesses and get them to their trade exit over the next sort of 3 to 5 years. And we spend a lot of time at the front end about understanding what that exit opportunity and pathway looks like to ensure that we get favourable outcomes. So I think the best way to bring all this to life is to talk through some of the current investments in the portfolio and how they're tracking. So the first one we'll speak to here was actually the most recent investment, which we finalised in December 2024, which was the investment in the telecommunications business SkyMesh. So SkyMesh is a regional player in the telco space, focuses at the moment very much around the satellite communication space, which we think is very interesting, and a really fascinating inflection point, really, because you're starting to see a lot of investments being put into the space by the NBN and the federal government to improve infrastructure. You've got the new players coming in, such as your Starlinks and your Amazon bringing out their lower Earth orbit satellite solutions. And so there's a lot of opportunity in this space. And we actually acquired this business, 100% of this business, and offered it a co-invest to our fund investors. And so it's something that we completed. It was a $48 million acquisition. We bought it on less than 6 times cash earnings. It's a business that's got 50,000 customers, a strong regional presence, and some significant opportunity ahead. We raised the money to not only acquire the equity, but also to put some growth capital into the business, and to just grow the business organically as well as inorganically. I'm really pleased to report, only 2 months into the investment, we're starting to see some great results, and we're really positive about the outlook. So firstly, I touched on, we recreated a board, put a new board in place. I chair the business. I've got our Paul O'Neill, one of our industry specialists, on the board as a non-executive director. And then, as I said, we've got Jordan Grives, who's come on as the managing director of the business, which has been transformational for the business already. So our thesis was, we saw some great inorganic opportunities, M&A opportunities, but we also saw real potential to go after certain pockets of the regional market, and we wanted to launch a B2B business, and we also wanted to launch a mobile business within that ecosystem. And we've made some great headway on all of those factors, but the most pleasing thing, I guess, to report is we had a thesis where we thought we could grow the top line organically 20 to 30% and get some margin expansion through that. It really wasn't a cost out strategy, but we always go in there looking to make businesses more efficient. 2 months in, what we've identified is at least $2 million of annualized efficiency gains in this business. So this was a business doing an $8 million cash EBITDA run rate, and now that run rate's north of 10 million before we've even deployed any growth capital and started to grow the top line. So really exciting, and a great reflection of the management team we've put in place there. We'll Emily will talk shortly about the co-investment opportunities, but what we often do with these investments is secure rights to have future equity rounds in the business, and we've done that with SkyMesh. So if any of the investors on the call have a particular interest to increase their exposure to SkyMesh, because we did do a $15 million co-invest round with the original transaction, or they'd like to enter a position, a direct investment position in SkyMesh, please reach out to Emily or myself, because there is that opportunity over the next couple of months on the same terms in which we invested, which is going to be quite attractive considering the positive momentum in the business. You're probably sick of hearing my voice, so I want to hand over to Emily to talk about the other two investments in the fund.
Thanks, Greg. Jumping over to Prosper now. So as a reminder to the people on the call, Prosper is an SME lender, and that business was actually listed. So we saw the opportunity with Prosper to take that business private, and it kind of fell to the whole growth at any cost when it was a listed business. And so they grew their loan book quite quickly, and there was potentially some, loans within that book that weren't ideal to have within the Prosper business. And so we did a lot of work on the loan book itself and recognised that the Prosper business could be quite profitable if it was run in a certain way, and that wasn't growth at any cost. And so we looked at that business. It was losing $10 million annually. And pleasingly, we've taken that business private, so it came off the boards in August of last year, and already that business is generating cash profits on a monthly basis. And our investment thesis is that business can get to profits of $20 to $30 million annually, which is really pleasing. So we bought that business on a just over 3 times EBIT multiple based on 23 earnings. And, if we can get that business to making $20 to $30 million per year, we can see the upside in the market value of that business moving forward. So we're really pleased with what they're doing there. They've stripped out, not only have they fixed their loan book now, and that's adjusted to the size of the business, there's also been a significant cost out program. And as Greg mentioned earlier, Stephen Benton, who is our board representative on the Prosper business board, he's played a large part in helping that business adjust its cost base to the size of the business. So really pleased with our Prosper investment to date, and see a really good trajectory moving forward for Prosper. We'll jump over the page to our next business, Market Boomer. So as a reminder, the Market Boomer business sits in the prop tech space for us, and so it provides a platform that helps hotels and aged care verticals, that helps them manage their procurement processes. So if you're looking at those business verticals, they deal with quite a few suppliers, and this platform brings that all together, so it's all in one spot. This was the first investment of the fund that we completed in June of last year. And again, there was kind of our investment thesis for Market Boomer was around securing 2 contracts. And again, pleasingly, both of those contracts have now been secured. And the first of those was a 5-year agreement with Accor Hotels, and that's across the whole APAC region. So they've secured that contract. And it's quite material, because Accor have effectively said to their supplier groups, if you want to supply to our hotels, you have to have the Market Boomer platform deployed. And so, again, quite transformational for the Market Boomer investment. And the second one is the ICCC down in Darling Harbour in Sydney. So they've signed an agreement with Market Boomer to deploy the software platform for those guys, and it's actually the largest user of food and beverage as a one-stop shop. So again, quite transformational for Market Boomer. Again, Market Boomer is doing well, so north of $5 million of revenue and profitable. So we're really pleased with that investment. And again, Greg sits on the board as an observer for that company. The last one for there is they've actually started to deploy into the UK as well. So that's a growth opportunity for Market Boomer. And the MD of that business, Malcolm, he's actually spent a lot of time over in the UK recently. So we see that as a growth opportunity for that business. And again, we see that creating meaningful revenues moving forward. We'll jump to the next slide. And this is just around the investment pipeline and fund outlook. So again, reiterating Greg's comments just around how we see the market. We're really, really excited and optimistic about 2025 and have seen quite a few investment opportunities that really are quite exciting for us to be tackling for this calendar year. To name a couple of them, so we've named 4 here, but we've kind of got probably a pipeline of north of 12 that we're conducting detailed due diligence on at the moment. So one that we're pretty familiar with that sits in the fintech space and has a core focus around payments and core IP. And that business, again, profitable, north of $5 million of revenue, great management team and board. And so one that we're looking to probably execute on quite shortly, that business there. A sports tech platform, it's actually got a number of different verticals, but has a SaaS element towards that. And then also looking to add a fintech add-on to that business. And so it kind of tackles a couple of different target verticals for the tech fund. And that's a really exciting business. Again, a great management team. And so, we see a lot of growth for that business line there. The next one is a SaaS business. It's focused on B2B revenues and has a revenue base of north of $17 million and is sitting on that profitability line. But those contracts are large recurring contracts. It's a sticky product. So once it's in, it doesn't typically come out. And deploying quite quickly. So that business is actually based in New Zealand and looking to deploy across the Australian market, which is really exciting. And then the last one there is prop tech. So we've actually seen, and we see this in waves in how we're looking at things, but we've actually seen 6 or 7 different prop tech businesses over the last 6 or 8 weeks. And so we're seeing a lot around the space and the sector. But that allows us to kind of pick and choose what we see is the best growth opportunity for us and how we can add value with our industry specialists as well. So there's one that we're looking at there, which again, quite an interesting business, a very big growth opportunity for them. And so looking at that one quite closely. And as Greg mentioned, there's a co-investment opportunity for SkyMesh, and again, reach out for that one. There's also another one that we're helping facilitate, and that's with Market Boomer. So again, if there's any investors on this call that look at Market Boomer as an opportunity there, please do reach out, and we're happy to touch base and help facilitate that. So I'll hand back over to Greg now, just for some closing remarks.
Okay, thank you, Emily. So we've hit the 12 o'clock, and probably lunch is waiting for a few of you. So we'll let you go, but again, just recapping, the Solder Brothers Tech Fund, 5-year wholesale fund, minimum investment $50,000. If you're an investor in the fund, you get this level of disclosure and detail on each of the underlying investments. But you also have the ability to co-invest alongside the fund in those investments. So again, we're really in an exciting part of the cycle for the sector. We really think the risk versus rewards stacking up very handsomely for the next couple of years. Again, we've got this unique team where we've got some really proven operators that can not only find us good deals. Each of those 3 deals we spoke to were proprietary deals. We sourced them ourselves, we originated them, structured and executed them, and now actively managing them. So you're not getting the same investments you get in a lot of the other funds. And so look, only a touched on that. Any existing investors, please, as always, reach out if you have any questions or require further details. Any potential new investors, again, pretty streamlined application process. We'd love to have you on the journey. Reach out to Emily or myself, and happy to provide you more information and help you with that process. But that's all for today. I'll pause now and just double check if there's any questions that have come through on the message board. Otherwise, we will wait. Let's have a look. It doesn't look like there's any questions at the moment. Again, we will send a recording of this session out to all the attendees, and also if you have any follow-on questions, feel free to reach out directly. But thank you again. We appreciate your time.
Thanks all.